Hi guys, welcome back to my channel. Kelvin here, and today we have Aaron and Sara, and they are
the Weeblings! Hi friends!
Can you guys give a quick intro about yourself?
We're Sara and Aaron, and we are TikTokers, I guess. We're posting about our journey to $1 million on TikTok. Aaron is a physio student, and I am also not in the financial industry. So I'm a communications major, and I'm helping my family business right now.
What's one fun fact about you guys?
So something that I guess people don't really know about us is that we are quite high sensation seekers. So we actually like what a lot of people classify as extreme sport.
Wow.
Yeah, so we're not adrenaline junkies by any means. So like not bungee jumping and stuff, but we like skiing and rock climbing and bouldering. Basically anything that requires us to put our feet into super painful shoes, like we're there. I don't know why.
Yeah, rock climbing is a very good example of that.
Yeah, so we have quite similar hobbies, and that's one of the hobbies that we share and we do together.
We both really enjoy like sports that has an ing behind. So like rock climbing, sometimes we skate, we do skating together as well. So not so much of like a team in competitive sports, but more of like individual sports, like swimming, running, jogging.
Like sports that you would encourage each other, like do again, try again, because if not we'll get very competitive.
Oh yes, she's very, very competitive.
So is he, which is good when it comes to individual stuff.
Right.
So like if I do something then he want to do it better instead of like
How do you got started on TikTok? Like how the journey was like?
We actually started last year, so about 7-8 months ago.
I think so. We started around December.
Wow.
Yeah, of 2021. Yeah.
It was a very random thing. We actually we're actually very shy, so we're actually very camera shy. I mean, now we're improving, but
Still
we used to be
camera
super
shy.
camera shy. And we actually wanted to post like faceless TikTok videos. Because we don't know that many people in real life who are super interested in trading and crypto and investing and everything, and so we end up only talking to ourselves. So we were trying to look for like a community, especially Aaron, because he's especially him, because he's another fun fact. Okay, extra bonus. He's super introverted.
Serious?
As you can see, like
I'm just down here. I'm like, Sarah, you do this stuff.
So during interviews when it comes to things like fun facts about you or tell me about yourself, Aaron would be like, Sarah. But like when it comes to like investing and trading, and like when you start talking about nerdy stuff, like later on, as you probably see, he will light up. He will like talk non-stop. Cannot shut him up. So that's the reason why we wanted to be on TikTok, to like kind of find a community and also share our journey with people, like-minded people.
Right. Actually, I'm also an introvert. But
I couldn't tell. I didn't know at all.
People can tell. Do you guys earn a lot on TikTok?
So right now, I think surprisingly to us, it's not bad. We are quite transparent about how much money we make on TikTok and stuff. So every month we do like a breakdown. So we've made quite a few $1,000s on TikTok already, and which is super surprising because I think because our first video kind of like blew up, but not blew up in like the millions kind, like just a few thousand views. Okay, I don't know. To me, it's considered blow up, but and then a few months later, we started getting brands reaching out to us for sponsorships, and then so we weren't sure how to charge, so we just charged whatever we thought was right, and we asked like a bunch of our friends who worked in the industry, like marketing and PR, for advice. And then so we've gotten quite a few, like maybe once a month-ish, once or twice a month, depending. Some months, this is like really up and down, right? So some months we'll have a few more, some months we'll have like none at all. Yeah, but side income, and we didn't expect to get money so soon. But right now, all the money we're putting back into the stock market and like buying equipment, like behind the scenes just now, Kelvin saw like buying equipment to like boost boost our production.
We're gonna get some. What else do we get? Lights.
Hard drives and stuff. Yeah. So I don't know what is a lot, but I think it is substantial enough for us to keep going, and we hope to like continue to make a business out of it, like our personal brand and things like that.
I think it's quite impressive because you mentioned it's like it's about 12 months, I think. And you have already started making $1,000. In YouTube, that's almost impossible. I think it's probably because you guys are doing a lot of brand deals, right?
Correct.
But in YouTube, from what I've seen, people who have done this for about a year, Like for me, even $100 at the time is good enough.
Maybe you were just undervaluing yourself.
So just try, just like give a larger number.
Yeah, I know other YouTubers also. To reach this kind of amount, right, a few $1,000s, they would easily have to have like 5,000 subscribers and above. Definitely.
Yeah.
So I think you guys are doing quite well.
Yeah. So I guess the thing with TikTok, what we realized, the difference between like other social media platforms, especially YouTube, because we are like huge YouTube watchers, not YouTubers, but we watch a lot of YouTube. Most of our education comes from YouTube. We realized that YouTube, there are a lot of ways to monetize.
Right.
So there's like brand deals, and some people sell products, some people do affiliate marketing. Whereas for TikTok, the problem is we really rely only on sponsorships because TikTok doesn't allow you to post links, and they discourage you from like even putting URLs and stuff. So we can't really do affiliate marketing, not at this point. So the only monetization strategy is sponsorships. So that's where we feel like we're quite limited, because we don't want, because with sponsorships, like you can't post too many because we don't feel like we should anyway. And on YouTube, sponsorships are like a segment of the video versus like TikTok's the whole video.
Whole video, right?
Yeah. So it's hard for us to balance in that way.
So we want to make sure that like we are recommending something that we ourselves have tried, and we feel that it's something that when someone uses it, they can actually benefit from it as well.
Yeah.
Otherwise, we won't really want to promote it as well.
Correct.
So that also like limits the amount of sponsorships that we can get.
Yeah.
And like affiliate marketing doesn't really work, because if you go to TikTok and you click on our link tree, and you want to sign up, let's say for any link, it doesn't bring you to like your web browser. It stays on TikTok. So if you don't sign up there and then,
We don't get
actually,
the-
it doesn't
Right,
actually get
right,
transferred over.
I think that's interesting because for me, affiliate signups are basically like 70-80% of everything. While sponsorships I don't really accept, because I'm also very choosy on what I accept.
Yeah.
So like if brands want me to talk about them, the thing I would look is that I'm not using them. So I wouldn't really accept unless it's something that's very general, like Skillshare,
Right.
those kind.
Or something that you use and really believe in.
So TikTok doesn't really pay anything, right?
No. Oh yeah. So YouTube, there's also like AdSense money, not AdSense, right? Yeah.
AdSense money is actually quite sad. Almost non-existent.
Really? I thought for what I heard, maybe it's like different region, but the American YouTubers are like, oh, AdSense is great for financial content.
That's because they have a few million subscribers.
That's true. That's true. Yeah, we only have 600 on YouTube.
Halfway there. You guys are halfway there. So you guys recommend me to go into TikTok also?
Yes.
Yes, we
For
think-
sure. Join us there.
Yes, TikTok's really, really fun as
Yeah.
well.
So I guess it will improve the exposure to stuff lah.
Yes, but I think our if we were to give you any tips, it will be to not just repurpose YouTube content. So actually create organic content for TikTok, because the TikTok algorithm, I think they know they can see if it's like a video that's filmed for like a long. So I mean you can repurpose, but that shouldn't be your entire TikTok account, because TikTok you value like authenticity and short form content, so it's quite different in that way. What we've learned. So we were also trying YouTube, and we struggle with that because we've been trained for short form content.
Yes.
And then
So
now, so I think on your side you have to train to be
Right.
short form content.
Yeah,
So
it's so easy for us to create short form content now, but when you
Yeah.
try to just make that just a 5-minute long video, it feels so difficult
Yeah.
to put it onto YouTube, and it feels like the camera shyness comes back again. Cause
they're talking to the camera for so
it's
long.
like now it's like horizontal. It just feels weird.
I get what you mean.
Yeah.
Okay. Let me try it one day.
Yes. And you expand your audience, because I think the audience are very different as well.
serious?
Yeah, because the age range and the people who use TikTok
Yes.
and the reason why they're on TikTok also seems to be different.
Yeah.
Yeah.
Because the type of content that people want to watch on TikTok is probably quite different on YouTube. Because even for us as well.
Yeah, because when you're on YouTube, like you're looking for maybe more like longer form,
Right.
more detailed explanation. Whereas on TikTok, you're looking for bite-sized information, quick snippets.
Yeah.
Let's move away from TikTok a bit and talk about your goal. You mentioned that you want to reach $1 million by when?
Oh, we actually never set a deadline or timeline
Wow.
because we don't know exactly when it will happen, and we don't want to take unnecessary risks to make that happen. Yeah.
Yeah, because if you wanted to get 1 million fast, we would be all in onto crypto.
Yeah.
But I don't think that's what we
Yeah.
want as well,
Yeah.
because the chance for you to get $1 million in a year is potentially there, but
Yeah.
the chance of us to lose everything is also very real.
Right,
Yeah,
right.
yeah.
Especially right now.
Correct.
And it's
correct.
also not in our nature. We are generally more conservative. We would rather grow small but consistently grow rather than risking it all just for one good play.
Oh, yeah.
It's just not our personality and not our style.
Yeah.
Right. Quick pause. Let me quickly share about the sponsor of today's video, Mumu SG. Most of us are only able to buy and sell US stocks during regular trading hours from 9:30 to 4 p.m. Eastern Time. But with Mumu SG, you are able to start trading during pre-market hours from as early as 4 a.m. Eastern Time, even before the market is open. And after the market closes, you can still continue trading after hours all the way to 8 p.m. Eastern Time. With extended trading hours, instead of having to wake up in the middle of the night just to trade, you are now able to trade at a time which is much more convenient to you. This data is available for free to all Mumu SG users. On top of that, if you sign up now and deposit 2,700 SGD or more, you will be able to receive a free stock worth up to 1 Amazon stock and receive a $40 cashback coupon. So if you have not signed up yet, you can sign up using my link down below. With that being said, let's get back to the video. But why $1 million though?
We want $1 million. I mean, number one, it's a very nice whole number.
Yeah.
But also with $1 million, and if we invest properly and we know how to invest, let's say in the Singapore stock market, if you were to just look for dividend yields, and let's say 5%, that would give us about $50,000 a year, which
Right.
I think is almost the median income of Singapore, or just around there, slightly below maybe.
Correct.
So that's not too bad to be able to get like a median income of Singapore without having to do any work. So that's just something that we're looking at. And
Yeah, we just want like passive income to supplement our other side hustles, because for us, we enjoy starting new businesses and exploring new things. So for example, before we started TikTok, we have like an e-commerce business that's still ongoing now, and we plan on starting more, whether it relates to the I mean, I guess everything kind of is related to the Weebling brand, but like for example, he's a physio student,
Right.
and he potentially might want to start his own physio clinic in the future.
Wow, okay.
And things like that. And like for me, my goal and dream is to start like a productivity system kind of consultancy thing.
Right.
So all these like additional side income will help us start new businesses.
Right, right,
Yeah.
right.
So
Yeah, and-
that is the goal.
And the biggest trouble for us is actually time, because if we want to start any of these things, it's not just the capital. I think we can bootstrap everything on ourselves and figure things out.
Yeah.
The problem is we don't have the time, because we're either working on something else or building something else.
Always
So
busy.
being able to have the $1 million and get some sort of passive income so that we can put food on the table will then open up a lot of space for us to try different things
Right.
and see how we can grow the other things as well.
Right.
Yeah.
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 I
And
think,
and
like-
lastly, some our parents are like getting older, so we hope that the passive income can also help supplement, so that our parents and my dad, my mom's not working, our dad
Yeah.
can retire and stuff.
Yeah.
But they have CPF.
Yeah, but not enough.
You want $1 million is because you want that passive income
Correct.
coming in consistently.
Yes.
For me, the reason is a bit different. With this $1 million, by using that 4% rule, I'm sure you guys know
Yes.
what's that.
Yes.
Oh,
Oh,
we just did a video on
yeah,
it.
we're just
Like,
gonna.
just did it.
Yeah, so it gives me that safety net where I can start quitting my job, technically.
Yes.
Yeah.
Haven't you already quit your job?
Yeah.
That's why I take that technically. So like even if I'm lazy or at making YouTube videos,
Yeah.
I can look at my $1 million and say, oh, I don't have to work today. so it gives me that safety net lah. If I want to quit, I can quit anytime I want.
Yeah.
But I may or may not lah. So it's just there
So it's 40K. Yeah.
for fun. I would definitely not leave it in dividend stocks right now.
Yeah.
Yeah.
Now it's a bit more challenging, definitely. Yeah, there's a certain math to it, but we don't have the $1 million yet, so we're still trying to figure it out. But I think being able to split between dividend stocks, a bit of bonds, and also
ETFs.
your mainly US equities, should be relatively okay.
Yeah, I think so.
Just not crypto. None of the $1 million will be going to crypto, most likely. Yeah. That's for non, like, I mean, we will definitely still be investing in crypto,
Yes,
but it will not be from the 1 million that we want to keep for passive income long term.
Yeah,
Right.
crypto
Yeah.
won't be our source of passive stable income.
Correct. Yeah.
Stable.
Yeah.
Stability.
We thought it was stable and then we got burned.
Oh yes.
So we might talk about it later.
Stable UST.
So right now, what does your portfolio look like?
Well, we divide our portfolio mainly into two parts. So we have a trading portion and we have a investing portion. So the trading one is for when we try to actively trade, and the investment one is really long-term hold. Like we don't really touch it. We just add value to it and we
Right.
don't touch it.
Yeah. So that will be where the $1 million goes to, basically, right? Yeah.
Yeah. So when it comes to like the trading portion, we split between crypto and traditional finance. So crypto, we have our normal crypto trading, and sometimes we take it off into MetaMask and go into the DeFi space as well. We don't do too much of it now because the space is it's not thriving right now. So we go back to what we have been very familiar with. So we go back to traditional finance. So we do options. We also sell calls, we sell puts. Just like we saw you had a video a couple of
I
maybe
did.
a few months ago talked about you cycling your options as well. So we do that as well.
Right. It's good money.
Yeah, it's quite good. What's yours? The wheel. You're talking about the wheeling
The
options.
wheel.
Yeah.
But I don't really do that
Yeah, we
nowadays.
also don't. The wheel only works when the market is going up, I feel. So
The reason I don't really do that is because it ties up the capital in that thing. So I rather just leave it in a growth stock, which can technically give a high return.
correct. Yeah, we personally do the wheel as well, but we do it with a very small amount. We do it more just to keep our head in the game, more than really generate revenue. But then we use options as a form of leverage because we don't do CFDs. So one easy way for us to get leverage is to use options. Not that anybody should be using leverage, like leverage a small amount to do trades. So like if you buy a call, you can actually, it kind of fixes your max loss as well. So just in case anything goes against you, at least like you only spend $100. So for the investing side, we also split, but we would split we have the crypto side.
Yeah.
So we are buying a couple of coins. So we have like Bitcoin, Ethereum. We also have some people telling us to buy certain coins. I don't think I want to mention it here. Not financial advice. So we're picking out some other coins that we feel that have potential to go in the long run as well. And then we have our Singapore and then US portfolio. So US portfolio, you can just think of it really your dollar cost averaging your S&P 500. Maybe we're a bit biased on maybe Apple, Microsoft, Google,
Okay.
Yeah.
a few companies that we generally use and we're more familiar with. And then we also have our Singapore stocks. Like we like Singapore stock, or at least I really like it because we find that we think the Singapore market has a lot more inefficiencies. So it's very easy for you to pick things up at a very good discount. So I think 2020, like your dividend plays, right? Like your DBS or certain REITs as well. If you pick them up during the 2020 crash, you're getting yields like 8-9%. And then when the market goes back up, that 8-9% stays with you forever. Sort of, and then right now the yield's actually going up. It's like 9-10%.
Right,
So I have
right.
some relatively good stable Singapore REITs that are giving like 9-10% yield. So I mean I've really gotten back 20% on top of the capital gain. So I thought that was quite good. And again, like these opportunities come more often in Singapore because it's a smaller market. So
Right.
less algorithms, more market inefficiencies that we can just like scoop up from.
Yeah. And as you can see, like we prefer safer assets.
true.
Yeah. So when to us we're like 9%. Ooh, but like some people are like, crypto's like 1,000%. Put all your money here. Yeah, we're not that kind. Yeah.
Yeah, I think we're very against drawdown. So like the good thing about Singapore stocks, even though people say, oh, it doesn't move at all, right? It just stays flat.
Right.
It grows very, very slow. So you can think maybe the capital gains is about 3 to 4% a year. It's very, very little. But you also get about 3 to 4, now it's about 4 to 5% dividends. So I think people underestimate dividends as well because that's cash that you can use immediately. If you need cash, you don't have to sell off your assets.
Yeah.
It's coming to you right now. You have cash on hand. You can use it to buy new assets, take it out to pay for whatever you need, medical bills or school fees for me. Like it's already there.
Okay.
So that gives you a lot of flexibility. So yes, on the long run, you may get lesser returns, but on the other hand, you get a certain amount of flexibility that comes with dividends as well.
Yeah.
So it's just
Right.
the way we want. And again, the drawdown is lesser.
Okay. So my criticism about dividend stocks is that it's basically no different from a normal stock. Just that you are taking a part of the stock to sell. That's basically what dividend is, right?
Yes, I guess so, because usually the stock price does fall every single time
Right.
dividends is paid out.
Right. So I think you're valuing the drawdown part, not really the dividend part, right? Because if you take it to use for something else, it means that there's no compounding going on.
Correct.
Right.
But the flexibility is there as well. So for example, during like the whole 2020 crash, let's say if you were holding onto a growth stock, 2020 crash, all your assets are down. You can maybe rebalance your portfolio, but your net stays the same, right? But during those 3 to 4 months, your dividend stocks still kept paying you money. So at that point of time, we took those dividends and then we could buy into stocks at a much lower, around 2020, so like very, very low valuations.
Right, okay.
So the dividend still keeps coming. And I think dividends, you could look at it in kind of a yield percentage, then it's valued a lot easier, or how to say value better. So like even though a dividend stock right now is only giving you 4%, 10 years later, especially for Singapore REITs, not recommending anyone to buy them, but if you did buy, I think Fraser Centrepoint Trust, the dividends has gone up 50% to 100%. So if you put in $100, it'll give you $4 every year, but now it's giving you maybe $6, $7, $8.
Right.
So the yield from the start is close to 8% now.
Right,
so the
right,
yield goes up over time as well, which is something that, again, people don't really calculate. Yeah.
Right. That basically the yield compounds over time. Okay. I'm still not convinced though.
Different again. It's really for like different risk tolerance and
Yeah.
what you would like.
I think
as
for
well.
us, we want a very balanced portfolio. So when whatever the market is doing, there's something that's working for us and in our favor.
The question would be like, why would you want such a safe portfolio? Like you're obviously not using that portfolio for anything now, right?
Oh, so that's why we have different, right? So we have trading portfolio and then the investing portfolio.
Right.
So we play around and have fun with the trading one, and
Right.
that's where we'll make more of our like gains. And then investing, we just want to make sure we have the habit of investing, safe investments. We want that for the rainy day as well.
Okay.
Yeah, and that's because that's where we're also going to be putting our $1 million in the future, right? So we don't want to make all our money from high risk, high reward trading. And then because the thing is that learning how to grow your wealth is very different from learning how to maintain your wealth.
Right.
And we want to build that habit from the beginning. Yeah. Because a lot of the people who like, especially like people who win lottery and things like that, which is basically the same if you 100x your money on crypto based off luck, right? The people who do that, a lot of them lose their money in the next year or the next cycle, the next trade, basically, and we don't want to do that. Yeah, we want long term.
So like for your long-term portfolio, how is your investing strategy like?
For our long-term portfolio, we also do something very similar to dollar cost averaging, but
Right.
instead of the typical every first of the month you buy in $100 or $1,000, we do it a bit more dynamically. So we noticed that, okay, this has stopped applying since the start of 2022, but during the bull market for almost the past 10 years, if you were to dollar cost every single time the market dips to the 10, 20 or 50 simple moving average, you would be you would have been able to, again, you're not going to make a lot more from simple dollar cost averaging.
Right.
Your yield is, or you just make about 1 to 2% more than simply dollar cost averaging. But we just want to make that, and it isn't very difficult for us. We just set a alert, it alerts, and then that day we just like dollar cost average in. And because I'm still a student, so like again, we run like e-commerce business and stuff, so the income that comes in is not very consistent. So maybe this month I only got like $500. Next month I can only pay $50.
Right.
So it's very hard for
The
me.
recurring automatic. Yeah.
And I'm doing like, if I'm working part-time, then only during like my holidays I get part-time, like money in part-time. So I don't want to spend it like right at the top. I want to
Right.
wait for a retracement. So dollar cost averaging for me during the retracements at 10, 20, 50 simple moving average would have been very good. And you can just go back and see the charts.
Right.
So that's how we dollar cost average.
I think your style is better than mine. Mine is based on emotions. when I see a green, I FOMO in. When I see a red, I buy more. So basically, I buy very randomly, but I tend to buy more on red days, less on green days. Yeah, so that's my current strategy.
Not a bad strategy, not a bad strategy.
Yeah, I think it'll be interesting to see which one will turn out better. But I suspect yours will because like resistance level tend to bounce off much better, right? Okay. I need to learn.
Okay, but this doesn't apply anymore in 2022 because we are not in a bull market.
Right.
So it no longer just touches the 50, because now if it touches the 50 simple moving average, you're buying right at the top. So you should not be doing that. This only applies when it's a bull market. It's a very safe, consistent bull market. So right now it's a bit different. Right now we have actually gone back to just every single month because we cannot time the bottom. We have a few indicators that could tell us roughly when the bottom is.
Right.
But even then, we're not confident enough to deploy such a large sum. So we'd rather just dollar cost average in. We know we're near the bottom around here-ish, at least local bottoms, then we just start dollar cost averaging around there.
Yeah. We still look at the price whenever it drops, then we buy, drops, then we buy, drops, then we buy.
Right. Are you guys keeping a lot of war chest money on the side?
I mean,
we
What's that?
all our war chest money was in UST.
Oh no!
Yeah.
Oh.
So yeah.
You didn't manage to pull up?
No, we didn't. We were Dokon fans, unfortunately.
Yeah.
And we were like, he was saying, but nope, he didn't. My money's still in UST, guys. So I'm waiting for it to repack. Just kidding.
Yeah,
But yeah.
we managed to get some out.
Right.
I managed to get some out on my personal account, but we did lose. I think we
Yeah.
lost about 10k.
We didn't get it out at like 93 or whatever. We
Yeah.
took it out quite
Right.
Yeah,
much later.
We lost about 10k. So basically, we made quite a lot of gains on crypto.
Yeah.
We bought Sand, we bought Root, all of this 3x, 5x, 10x. And all of that 10x money, we're like, okay, we need to hold it in stables to prepare for
For the bear market.
collapse.
Yeah.
We did, and the stable coins that we chose was UST.
Yeah.
Um,
And on Anchor. Yeah.
we were
So we were actually saving cash in our heads, and I think a lot of people's heads at that point in time.
Me too.
Yeah, so UST was like cash to us, so we were saving that for the bear market that we knew or we foresaw was gonna come, and then it died, and then so
Right.
now our war chest is basically all the money they were currently earning, which is why we said TikTok, we're not pulling any of the money out yet. We're all just putting back in to fill up the hole that UST left in our heart.
we do have quite a bit in our war chest as well, but it's actually held in our trading account because our trading account right now is a lot more cash because we go in, we come out, we go in, we come out. So we have a decent portion of our money in our trading account.
Right.
But right now the majority of it is in TradFi, traditional finance, because the crypto
Yeah.
one's empty.
Oh, but now we're like going back in.
Yeah.
In crypto, but not trading very much there. We're not trading at all.
Yeah.
We're just dollar cost averaging into like the bigger coins like Ethereum, Bitcoin.
Right.
Yeah, whenever it goes down. So now we're doing what you're doing. Whenever it goes down, ouch, can go back in.
So for me, I did also lose a bit in UST. I did saw signs that it was going to collapse. My mistake was believing that it could go back up.
Yes.
So I think it was on a Saturday or Sunday. It started to depack
Yeah.
to like 96 or
Yeah.
something, right? Then I went online to search, right? I saw this tech lead video where he believed that it can go back up. And I said, oh, okay, everything will be fine.
Yeah, we have a group chat also with like some other
Yeah.
TikTokers, crypto TikTokers, Singapore. And then we were all like, oh, it's like it should be fine. I mean, because the things that also it's our trading investing money. It's not like
Yeah.
our life savings and things like that. So obviously, like people we knew that had their family savings, everything, they were like take out, just take out. But
Yeah.
like for us, we were willing to. It was a calculated risk for us, I guess. So
Because we only put in our profits there. The majority of our initial
Yeah.
holdings are still there. So we just basically made a lot of money and we were just back down to square one on crypto.
yeah,
So it
Right.
wasn't so bad.
Yeah,
but
it
we
wasn't
could
so
also tell that what we thought would happen is like Anchor would just come down. So
Yeah.
it will eventually match the rest at maybe 4-5%.
Everyone thought that would
yeah,
happen.
yeah. And
So-
we I guess we didn't think that it would like die so quickly. We were
Yeah.
like, okay, well, it's just a game of chicken, right? So like who runs first? But we didn't think that we would have to run so quickly. Yeah.
You're so fast. You're so fast. It
'Cause-
collapsed in like what, 2 days?
Yeah, because the community seemed extremely strong on Twitter
Right.
and everywhere, right? YouTube,
Right.
everyone's like,
Yeah.
what was
Oh.
the lunatics? Yeah,
Yeah.
yeah. So we're like, okay, people won't like run, but I guess there were too many people who weren't really like they aren't. It's the first time they're dipping their toes into crypto, so I think they also got scared and ran away.
Yeah, but I guess that's a good learning lesson for us
Yeah.
as well. So now we look at stable coins in a not so stable way.
Yeah, I think
we-
everyone in the world looks at that now.
Yeah, which is good learning lesson for us. Again, we put a lot of our profits in, so we just lost profit. So
Right.
not too bad. We don't feel so much pain.
Yeah,
It's just I find it troublesome because we got to restart again.
Right.
And slowly
right.
build up from there.
Yeah, that's the hard part, right? But would you trust back stable coins again? like let's say USDC, USDT, or even like Singapore stable coins, US stable coins in the
I
future?
think XSGD is one of it, or SGDX.
I guess trust depending on what you mean by trust. So maybe we wouldn't keep money that we want as cash in anything other than cash anymore.
Right, okay.
Yeah, because I mean the thing is that even if you keep cash in an exchange, it could just be as risky as keeping it in stable coin. Because if like the exchange crumbles,
But they have insurance.
yeah, but not sure whether we'll get all the money back. And like with crypto exchanges, depending on what you use, if you use a decentralized one,
Right.
if the government isn't there to like do anything about it, then it's
Yeah.
also like
dangerous.
So cash is cash for us. But I think if we're using it like for example USDC, if we wanna put it into Nexo or any other staking protocols, we will look at it as riskier.
Right, right. That's what I tell people. People tell me that Anchor is a savings platform. I
Yeah.
say no, don't do that. That is a investment, not a savings platform.
Yeah. I think our problem was that we looked at it, we didn't know, so it's like our first time, and then we learned our lesson. I think a lot of people learned the lesson together.
Yeah, me too.
Yeah.
I lost quite a bit.
Sad.
Said.
How's your trading strategy like?
Well, then we also divide it into, depending on what asset class we are looking at. For crypto, the way we traded profitably was we did this pseudo delta neutral strategy kind of thing.
Right.
So what we do is we short Bitcoin and then we long altcoins. So if you notice the trend, like when Bitcoin rises by 5%, altcoins would rise like 50%.
Right,
and when
right.
Bitcoin doubled, that's when you get your 10x's. So even though you would lose maybe 50% of your money by shorting Bitcoin, when you long altcoins and they all go up 10x, majority of them at least went up like 5x, then you are still up like 4x.
As you can see, most of our strategies involve hedging our bets in a way which you can see our personalities.
Yeah.
Like quite
Yes.
safe.
Same personalities.
Yeah.
Oh, I think this is the first time I've heard of this kind of strategy.
Yeah, I actually heard a friend. Oh, it's because we have a friend who's a hedge fund manager, and that's how they manage their hedge fund. Like
Right.
they would long.
Shout out to Ivan.
To put it into, hopefully I'm getting it right, but from what I gather and the example that was said, for example, you are long the telecom sector, just like how I'm long crypto.
Right.
So you could either long the entire sector or you can look and dig deep. So let's say you think Singtel is going to outperform StarHub. So what you would do is you would long Singtel and short StarHub, and then you would make the spread.
Right.
But because the entire sector is going up, so that spread also keeps pushing up, but the spread will widen because you see that Singtel is going to end up doing better than StarHub.
Right.
You're
Then the
still
spread will
long,
widen.
but it's just
Yeah.
less risky.
And for them, but because the spread is very, very little, what they would do is they take 5 times leverage. But I'm not going to take 5 times the leverage on that because you never know what happens, right? But in crypto, you don't have to take leverage. The volatility is crazy.
Right.
Like to make a 5x, they would take 5 times leverage. In crypto, you don't have to take any leverage at all.
Yeah, it's like 5 minutes.
Yeah, and the best part is that I can code all of this on Python and it just does it for me. So I don't have to worry about it.
We
Like,
released the script, right? This is the
Yeah.
script that we released the script. But this was a long time ago, 6 months ago, like when we just started.
Yeah.
Because that's when it was good to use this strategy.
Because this is a net long strategy, so you need to, and you really must understand how it flows. Like Bitcoin usually rises first, then altcoins.
Right.
So if you're shorting Bitcoin, there will be a time when you are just like in the red.
You need to close.
You need to just wait
Yeah.
and feel that when the altcoin would, because Bitcoin rises first, then altcoins, so you need to wait through that red zone until the altcoins finally rise at the end. Then it balances up. But it's a hedge. So when everything collapses, so for example, when everything collapsed, we were long a lot of altcoins, but we were short Bitcoin. Bitcoin is now down about 60% from all-time highs. The majority of our altcoins are down 80%.
Right.
So we technically, the pain that we
Yeah, so
felt
the-
is about 20-30%.
Yeah.
While everybody else is probably down like 70% on their portfolio,
Yeah.
we're down like 20%.
Yeah.
Because we shorted Bitcoin as well.
Yeah.
So that's the hedge right there.
Yeah.
Right. That's for crypto. But what about
yes.
stocks?
Yeah.
So for stocks, it's a little bit different. It really depends on. So because traditional finance, we still have things that we can look at. We have economic data that we look at.
Right,
We
right.
can look at the Federal Reserve. We can look at economic calendars and see whether a company is doing well, whether a company is not doing well. So with your financial statements that we normally look at as well, that's to invest in specific companies. But we also don't have a lot of time. So we normally trade the SPY. We normally just
Yep.
if the SPY is too big when we're doing options because of our portfolio size, and the diversity that we have, we go into SPLG. It is also the S&P 500, but each share right now is about $45-$46.
Oh, it's another version of S&P 500.
Yes.
Right.
It's much smaller and it's very small. So when you trade options, it's very cheap. I think if you buy one at the money call right now, it's about $100.
Oh, so cheap.
Yeah. So if you buy it on the SPY, it's like, I don't know, 1,000, 2,000?
Yeah.
Yeah.
Yeah, a few thousand.
Yeah, a few thousand.
Yeah.
So it's
And we
difficult.
we don't really deploy that much capital at once.
Yeah.
Yeah.
Okay.
So, because we're just trading. So for that, we also have a couple of indicators that we look at, but the type of indicators that we look is not based on just the charts alone. So we try to look at market indicators, so like your PMI, your lumber to gold ratio, your McClellan oscillators, your breadth indicators, so all of these kind of stuff, right? The reason why we look at them is because
Kelvin's face.
yeah, it tells us what the market is doing, not what the stock is doing. Because indicators like RSI, MACD, if something macro happens, it will affect the charts in a way that you cannot understand it.
Right.
So like the MACD, your RSI, Fibonacci's, everything makes sense if there's no like big macro event. So instead of focusing on individual stocks, we look at the macro thing. So if your PMI is going down, it's a leading indicator that, hey, the economy may do badly. So
Right.
how am I going to position myself? I'm going to take the short side. Well, we also have the 200 simple moving average, that if it's below the 200 simple moving average, we just take a more bearish stance. There is the Fibonacci line to trade.
Right,
But we also have, again, your breadth indicators to find capitulations. Most of our trades is actually timing the bottoms. I think it's easy to time the bottoms, but it's impossible to time the tops. The bottoms is easier for you to time because when price crosses a certain level, capitulation happens and everybody is selling, and the velocity just keeps increasing because if you're long, it hits your stop loss, someone sells, it hits another person's stop loss, and it keeps going down. So it's very easy to spot those events and get in. It doesn't happen very often, but again, breadth indicators is a way for you to spot that.
Right.
It's not like a one indicator, one size fits all, because it depends on the macro environment as well. We're pretty good at timing that, but not very good at exiting the position. So we usually just set stop loss and take profits. And then that's where we really take on the leverage, because that's probably like an 80% winning trade.
Wow.
But it only happens maybe like 4 or 5 times a year.
I see. Okay.
You gotta be disciplined, like he said, to take profits.
Oh yeah.
Yeah. Sometimes if you try and be greedy, then we'll miss it. Yeah.
Yes. And again, it only happens 4 to 5 times a year. So if you miss one, that's like a huge missed opportunity.
Where do you guys learn this kind of skills?
YouTube
Mostly
is
YouTube.
one of it. But again, it's like taking information from people around you. So again, like some hedge fund manager telling me how he manages his fund. And I can think about how to extrapolate that into crypto, for example, which is so different, right? Because one
Right.
is traditional finance, hedge fund is about being safe.
Right.
How can you take that and then
Yeah.
implement it into crypto? So like there's a bit of like just connecting the dots, and like again, just like the capitulation kind of thing. Like I was watching a video of another hedge fund manager talking about how he's doing something similar. So now that I understand what a capitulation is, now how can I find it? And then there are some videos online that talks about how to find it, and then that's when like I just start to find my own indicators. So the indicators that we talk about, we actually code it out ourselves. So it just helps us trade. But it's all free stuff. It's actually information that is available online. We
Right.
find that a lot of people cannot use it because you can find the information, but then it's hard for you to look at that information and then immediately implement it into your trading. You would have to look at the chart, open up another chart, and then look at different websites with different UIs and UX, and then finally open your trading account to trade. It's
Right.
very difficult. So we code it out ourselves so that everything can just be in one, for now, trading view. So we can just see everything. It's quick, it's fast. And again, the opportunity comes 4 or 5 times a year. So it's a lot of preparation time that we can work on.
You should make a video about that.
Hopefully, we'll try to post something.
We actually have some
Yeah.
videos, but TikTok
It's
sometimes
hard,
it does
right?
well,
It's
sometimes it
hard,
doesn't do well. Yeah, yeah, because 1 minute is not enough time to explain, and then sometimes it
Yeah.
can be a little bit too complicated for a lot of the people on TikTok as well.
Yes, like trying to explain this is gonna be very complicated, and it's no easy resource for you to find because you need to
Right.
combine all of it.
Yeah. Like even for options, it took me like 3-4 videos to explain the whole thing. And after the whole thing, I still get confused myself. So right now, are you bullish or bearish about the market?
Everybody keeps asking us that.
Yeah, that's the question that people keep asking us.
Go ahead.
We are bearish on the economy. We think that the economy is not going to do very well. That may not necessarily translate to a downturn in the market.
Correct?
An example that I heard, or not an example, I think a few people, so I think Raoul Paul from Real Vision Finance put it quite well. If the economy is going down, the Federal Reserve may then be less hawkish, to be more dovish. So they would then stop raising interest rates. They may stop quantitative tightening. That's going to signal like a push up.
Yes.
So if that happens, which is why there's the whole rally, even though we had the highest inflation number ever, we had one of the largest like rallies in this year.
Yeah.
Because people thought that would be the case. So again, economy going down, stock market going up.
Right.
Right.
It's predicting the future.
Yes.
Right.
But right now, again, so the inflation data came out that we may have hit peak inflation, right? So, maybe things are going to get better now. Then the Federal Reserve came out and said, we're going to be hawkish. We're going to keep raising rates. We're going to increase quantitative tightening, and then the market goes down. So you see there's a very disconnect between what's going on in the economy and the stock market now.
Right.
So that makes it very difficult. So again, we have a lot of economic data that you can read, but then again, see how you translate that into trading and investing is going to be very difficult.
So are you bullish or bearish?
Bearish on the economy, unknown for the market. The market, we're going to be trading it solely based off
Short
technicals
term,
and market
yeah.
indicators. So below the 200 simple moving average, we're going to remain bearish.
Right. So my interpretation of this whole thing is the quantitative tightening is going to ramp up in this month, basically, which will have an adverse effect on the market. But with that being said, I feel that all this has already been priced in, unless there are new black swan events happening.
But okay, so from what I know, this is, at least as of August, the way that they do quantitative tightening is actually just letting the bonds expire.
Right.
They're not even like buying back into the market yet.
Right.
So I'm not sure how people are pricing it in. If the market is pricing the Federal Reserve selling back into the market, then prices will hit much, much lower. Right. But if the market is pricing in that the Federal Reserve is already selling back into the market, then that's actually wrong. Because the Fed is not selling into the market. They are just letting the bonds expire or mature. And then that's not really like quantitative tightening, the way that they did quantitative easing, which is buying things up.
Right.
So we haven't had a selling hand that is pushing the market down yet. It's just market speculation. So we'll see how it goes from here. So it's really what the market's pricing in, and I don't know.
We have almost come to the end. For the final question, do you have like any uncommon advice for investors who are looking to invest and grow their money?
We have a common advice, which is we just feel that now is the best time to be looking into the markets, because we find that the most amount of attention like finance and investing gets is usually when you're at the top of the market. So fresh people comes in and ends up being the back holders.
Yeah.
So right now, if you're watching this, means you're probably going to be here during the down times, and this is when you want to start at least learning how to invest or learning how to trade, because now is the best time to get in. Because even if you are wrong, the downside is not as much as it would have been if you started right at the peak, like when Bitcoin was at 60K, for example.
Now that's the scariest time, is the best time to start educating yourself. So that, because the thing is that I think a lot of people start learning when they see the market going up. And then by the time they understand it, it's too late.
Right.
Now, when everyone's scared and things look like crap, if you learn now, you will have at least some basic knowledge to deploy your skills and money when it's time to deploy. I mean, now's a good time to deploy, but if you don't want to deploy your money yet, educate yourself now first. So that when you feel like it's the right time, you won't be scared anymore.
But when's the right time?
I mean...
Follow Kelvin's he'll let you know.
I feel like every time, no matter when, there's always a right time, but it's just what strategy is right for that particular time. And if you follow us on TikTok and Kelvin on YouTube, you'll know when it's the right time or what's the strategy for this time.
Yes. Yeah. Different strategies for different times.
Yeah.
Just like how we DC8 as well. It doesn't work now, it worked back then, and you got to be dynamic with how you change your strategies.
Okay, I think we have come to the end of this interview.
Thanks for having us.
Thanks for having us.
If you guys have not checked out the Weeblings yet, do check them out. They are almost reaching 30,000 subscribers. They give you a lot of trading advice as you have seen just now.
Follow us on our journey to $1 million.
Yeah.
Post everything that we learn, and hope you guys can follow along. And hope you guys can learn from our mistakes as well.
Yeah.
Right. And with that being said, see you guys.
Bye.
Bye.